Hello, everybody. How is it going? It's been an interesting week here. I'm still trying to read my books, my self-help books. I've been struggling with this one, and I don't know if you can see it, but it's How to Develop Self-Confidence and Influence People by Public Speaking by Dale Carnegie. And I've been struggling with it. I've had this for a couple weeks, just not finishing it. And I think Dale Carnegie wrote this back in the early 1920s. So I think that has a big thing to deal with it. I may just put it down and go on to my next book, which will be Fear is Just a Four-Letter Word by Tracy Tutor. Because like I said, I'm stuck. The way that the book was written, it's just written in that older sort of tone. Originally, it was public speaking for men, if that tells you something, how the times have changed. So yeah, a lot of stuff going on. I wanted to show this because someone has asked. So this is the Android version of the app. And it looks, you can sit there and monitor stocks. But I've added, and I'm working on an alert settings page. Right now, hopefully for the Android version, when it alerts you for a break or a close, it'll buzz for a half a minute. And someone has asked if we can change that. And I think I'm going to go up to 5 seconds. And I'm going to actually add to make it either vibrate or give a ringtone. And that's the part I'm still working on. But if you can run the app without going into that page, and it'll work fine. It'll buzz for a half a second. It'll act like the default settings, but it'll be an option to change that to either be audible or to change the duration. So that's what I'm working on for Android. Hopefully in a week or so, I'll have a new version out there. If you saw from my posts a couple days ago, well, actually today, still struggling with Apple, still working on getting Apple. And I haven't given up. I'm not giving up on Apple. I just need to play by their rules and get it done. Alan and I spent a little time looking at different charts and kind of discussing rules about how to trade with the app and how to get the most out of it. And it for two main things I want to point out. One, it's a momentum trade. And two, it's a trade that does not last all day. You need to be nimble. You need, when you start seeing the stock start to go against the momentum that you're playing with, you need to respect that. You need to trust the system. You need to understand the levels of where resistance and support are. And you need to know when that momentum that you're playing changes or reverses. Because if you don't, more times than not, you're going to be on the losing end of it. I think there are a couple stocks that Alan and I want to go through. And I think the first one he wanted to mention is OPK. We've been working on this for a week or two. If you look at the daily chart, it just can't seem to get above this 380 level. It's trying. This is more of I think a buyout situation or some sort of news is going to hit this and it's going to pop. Now, the problem with options is you don't have the time to wait. As days tick by, your option is going to start to lose money. So I think, I don't know if Alan will agree, and hopefully he'll mention what he's in with this trade. But I believe this is more of a stock trade than an option trade, because with stocks you can hold it, wait around. You don't have that time constraint on the trade as you do an option. So, and I know Alan had posted, you had gotten into 200 contracts of something.
Yeah, OPK.
Yeah, was that yesterday you got?
Yeah, at the end of the day.
And are you trading weeklies, or are you trading or going further out with this?
No, not much further out. I wouldn't do weeklies. So the issue the other day when we had the OPK trade, it was making new highs. Started at $3, went to $3.10, $3.20, $3.30, $3.50, $3.60, $3.72 was the high. When a stock makes new highs, if you bring that up on a 10-day chart, you'll see what I'm saying.
And I think this is where, we bottomed out with this one.
Yeah, that's not 10 days though.
So here's the 10-day, whoops.
Yeah, I'm thinking.
Here's the 10-day chart. So
how about if you put the 1 month so you can see it?
So we came up.
So the thing is that you were a buyer at $3. You had the momentum up, and then it got you up to 372. The reason is you stayed with the trade because the trade was working for you. When the trade stopped working for you, you didn't get back into the trade. Yesterday was the first day that you were allowed to get back in the trade. And because it broke 372, you were supposed to get rid of it.
On the way back down.
Well, needless to say, the option volumes were going our way. Everything was going our way. So the thing is you had to respect that. I said, it's going for $4 a contract. It's $200. Don't go any more than $200. This isn't a casino. This isn't a slot machine. It isn't a lottery ticket. This is just something that you were trading on the money, following the trade. And it was just a matter of getting into it, but not gambling, just basically putting in a small investment, and then hopefully it would have paid huge dividends. So the issue is that I don't think you should be in any stock long term. That's my philosophy. I don't see any reason why you'd want to. They all will fail you, period. It's just the way it is. You had Thor and the Winnebago had the best earnings that it's ever had. They both spiked upward. They both had a great trade. And then what happened? Is that the thing is they all took it all back and it went down. So the issue of the matter is that, it hit a high and then it went back down. So,
and I think Thor was a good example of the 5-minute rule today.
Oh, absolutely.
And let me draw a line. So let's talk two ways. One, conservatively. Darn it. Let me get back to the 1 day. 1 day, 5
Well,
minutes.
there's a classic example. So this is why we have a 10 o'clock rule. 10 o'clock rule is you get out at 10 o'clock and wait, sell, wait, see what happens. 10 o'clock is a very big reversal. So if you had sold at 10, you would have made a lot of money.
Which is right here. Yeah.
Yeah, at the
So
top.
this is this third candle. Conservatively, this is the third candle that gets you in. Why not the second? Because
Because it didn't
part,
finish. Yeah.
right, part of it is below that 5-minute high. Now, if you wanted to be aggressive, buy on the second candle as soon as it breaks above that 5-minute high.
And if it goes below it, you get out.
And you need to be Johnny on the pulse with that and make sure that if it breaks below, you're out.
And we're talking about when it broke the 5-minute low. Look at that.
Yeah, and actually, yeah, let me draw. Now, there's another way to look at this as well that Alan and I talked about. So this candle here, momentum is going up. What happens at 10 a.m.? It plateaus and momentum starts to go down. That's a signal to get out. Now, momentum's going down, momentum's going down. Here's your 5-minute high. This right here is support until it's not. And when it's not, that is an indicator to go short. Now, and again, it's an aggressive short. If all of a sudden you're in here because it's below the 5-minute high, you're buying puts and it bounces back above this 5-minute high, that's a signal to get out. That means that it although it didn't hold that 5-minute support, it's still considered a long. But since this continued to trade down, you know, you hold your short, it breaks below this 5-minute low, add on to the trade if you can. You know, Alan had a good example. It's like when you get cards and blackjack and you split them, you know, double down on this trade because now here's another level of support that broke as well. It's another reason to go short.
Now, going to that trade though, why is that line so significant right there? Because it gives you a hard stop. So if this is what gets me, when someone tells me they lose money, I always say, show me your trade. Right there is that even if they would have bought at 12:35, where that first red bar is, go down, keep going. Next one. See what you could have bought there. Now the next one. And go to the left, one more.
Oh, this?
No, the other way. Yeah.
The
That's your buying. You're allowed to buy there with the premise that you got to stop if it goes ahead and goes above the 5-minute high. You follow me?
Yep, exactly.
Because that's where your stop is. Now, the thing is that if you buy in there, you hold on to the trade, but if it goes below the 5-minute low, you double down. So now you're making double the money. And then the thing is that, you know, you did well. Now, some people would say, well, geez, Alan, do I hold overnight? No. Then you're a gambler. Go to the casino. Because all I could do is tell you is that I'll go ahead and give you an example. Alan, what's it going to do tomorrow? That's all it is. If someone told me Winnebago and Thor would have gone up the next 2 days after it went down, I mean, look at what it was at today. What did it hit? A high of $88?
Yep.
What was the high today?
89.42, I think.
I think you're right too. The point is that, you know, the stock was just a couple days ago was down to 81. 2 days, 2. That's how it works. You know why Winnebago went up? Because oil prices went down. Just kind of like what I was telling you. It's a counter trade. You know, nobody buys Winnebagos and Thor when the gas prices are too high. Well, when the prices drop, then it's a buying opportunity. So.
Right.
Awesome. Well, I'm gonna get going here, Brian. I had a long couple days, and so but you need to go ahead and tell those guys at Apple you're gonna take a bite out of their apple if they don't go ahead and let us get in there.
Yeah, I want my day in court where I can just go and, Apple is huge and they're a corporation. They don't have a person that you can say, that you can sit back and forth and say, well, listen, this is what it does. And they could say, well, this is what we see. And I say, well, no, this is, it's pretty much, here's a message. They respond with a message. I just need them, I need to understand where they're seeing options in the app, because I've taken most, if not all of the option related or option mentioning.
The other thing is that go ahead and see who they've approved. I'm thinking they've approved Fidelity, Scott Trade, all the other ones.
Yeah.
See if there's any apps that have anything about trading or options. I'm thinking you're gonna not find any.
Well, I think the thing is that they have specific option chains that they mentioned, whereas ours just said buy calls, buy puts. It was nothing.
Yeah, and I don't think it has anything to do with it. I mean, it may have a little to do with it, but what it is that you need to try to get more of a generic face like the other ones.
Definitely. Yeah.
Yeah. They don't want a trading app. That's all it is.
Right. Exactly. Yeah.
But
yeah.
All right, bud.
Okay. Sounds good. Everybody have a good rest of the week. Short 2 more days. And then we get to enjoy the weekend. So.
All right.
Have a good night, everybody.